Mandhana Industries, where for the last two trading sessions, the stock has been locked in a lower circuit of about 20% each, and the fall is coming on very large volumes. Mangalam Maloo joins us to tell us what's going on with the company. Mangalam, anything that you've picked up lately?
Indeed, Rima, the fall has been on large volumes, and even as we speak, after the 36% fall that we've seen in the last two trading sessions, there still are 7 lakh pending orders on BSE itself. But tell you what, it looks more technical in nature than fundamental. I had the opportunity to speak to the management yesterday and off the record. While they did say that there is nothing which is of immediate concern to the company, there are a few things which the street is worried about. The first one is the stress on their working capital. Remember, in FY16, the working capital days tripled from about 12 days to 33 days itself. So because of which we saw CARE downgrading the rating from the of the company's credit that they had. Long-term debt was downgraded from CARE A to CARE BBB+, while the short-term bank facilities were also downgraded. And the ratings revision, CARE said, is due to the stretched working capital cycle, due to the elongated receivable days, as well as the fragmented nature of weaving and garmenting industry. So this is what perhaps spooked the initial round of selling. The other thing is also, while the promoters have been increasing their stake, the bar chart should come up for you. They've increased their stake from 71.8% in September to 72.6% in as early as or as late as March. The increase in pledge share is what is spooking the street. While there's number of shares that the promoters own has increased from 2.37 crore to 2.41 crores. The number of shares which have been pledged is 1.03 crores. That has increased from 1.03 crores to 1.11 crores. So after a 20% fall, there is a big risk of the promoters' shares pledge shares being invoked, and at the same time margin calls being triggered as well, because of which we are seeing this pressure on the stock price itself. And I was wondering who could be the sellers. A couple of non-promoter shareholders who hold a large chunk as of March 2016 include the likes of LIC, Religare, Finvest, Axis Bank, as well as Bajaj Allianz. None of them are disclosed in the bulk deals data itself, but the jury is still out on who these sellers could be.
Okay, Mangalam, well, we'll be tracking this stock very closely in the coming few days to put things into perspective and give you a sense in what the company does. It's a textile company. It manufactures and sells garments under the Being Human brand, and Q4 garment revenues were just up 1% on a year-on-year basis to 70.3 crores. For FY16, the profit was down around 9% for the company as well. So that's the stock in focus, down over around 30% in just 2 days. But let's get